Welcome back to Bonnie's Life, where we don't just read the charts, we read the room. And let me tell you, the room right now is sweating. We are looking at a market that is caught between the hammer of extreme fear and the anvil of geopolitical tension. But as we always say here, where there is chaos, there is opportunity. Today, we are going to dissect exactly how to trade this current market, whether you are a short-term scalper, a mid-term swing trader, or a long-term diamond-handed investor. We have a lot to cover, from the staggering liquidations we saw over the weekend to the looming shadow of President Trump's national address tonight. So grab your coffee, or maybe something stronger if you've been looking at your portfolio, and let's dive in. Let's start with the hard numbers, because the numbers don't lie even when the headlines do. As of right now, the total cryptocurrency market capitalization sits at $2.454 trillion. That's a 3.2% bump in the last 24 hours, driven by a trading volume of over $85 billion. Bitcoin is currently trading around $69,328, having briefly tested the waters above $70,000, but don't let that slight green tint fool you. The underlying sentiment is grim. The crypto fear and greed index is currently sitting at 14. That is extreme fear, ladies and gentlemen. In fact, we are in the middle of a record 59-day streak in extreme fear territory. The market is terrified, and when the market is terrified, the weak hands get shaken out, and boy, did they get shaken out. Over the past 24 hours, we saw over $324 million in total liquidations across the market, wiping out more than 85,000 traders. When Bitcoin made that sudden, abrupt move past $70,000, it caught the bears completely off guard. In just 1 hour, $71 million in short positions were vaporized. It was a classic short squeeze, a violent reminder that betting against the king when liquidity is thin is a dangerous game. Meanwhile, the open interest in Bitcoin futures has jumped 5% to nearly $49.5 billion. The total crypto futures open interest is sitting at a massive $107 billion. What does this tell us? It tells us that despite their fear, the big players are still placing massive bets. The leverage is building up again, and that means more volatility is on the horizon. So, what type of market are we currently trading? We are in a highly leveraged, news-driven consolidation phase with a bearish bias but explosive bullish potential. It's a coiled spring. The technicals show Bitcoin is essentially in a bottoming pattern, trying to build a base after recent weakness. We are trading below the critical 200-day moving average, which sits around $71,200. That is our major resistance. On the downside, we have solid support at $67,000 and the February lows around $64,800. The daily RSI is hovering around 44 to 47, neutral territory, suggesting the momentum is balanced but fragile. However, the hourly MACD is gaining pace in the bullish zone. We are seeing a market that wants to break out, but it's waiting for a catalyst. And that catalyst might just be happening tonight. President Trump is scheduled to hold a major national address and press conference from the Oval Office, flanked by military personnel. The topic? The rescue of a missing F-15 crew member in Iran, part of Operation Epic Fury. But the market isn't just watching for a rescue mission. It's watching for the ultimatum. Trump has threatened to unleash hell on Iranian infrastructure, including power plants and bridges, if they do not reopen the Strait of Hormuz by Tuesday. This is a massive geopolitical flashpoint. The Strait of Hormuz is the world's most important oil choke point. If it remains closed, or if the US launches strikes, we are looking at a severe energy shock. We are already seeing the impact. Brent crude surged above $110 a barrel before pairing some gains on rumors of a potential 45-day ceasefire being negotiated by the US, Iran, and regional mediators. The market is pricing in two extreme scenarios: a devastating escalation that could send oil prices to the moon and crash risk assets, or a diplomatic breakthrough that could trigger a massive relief rally. For crypto, the implications are profound. Bitcoin has traditionally acted as a non-correlated asset, a digital gold. Indeed, Bitcoin is currently priced at about 14.9 ounces of gold. If the geopolitical situation deteriorates, we could see a flight to safety into Bitcoin. But if the broader financial markets panic and liquidate assets to cover margin calls, Bitcoin will likely get dragged down in the short term before it can decouple. Beyond the Middle East, we have other macroeconomic forces at play. The recent US jobs report showed a massive increase of 178,000 non-farm payrolls, the biggest jump in over a year, while unemployment fell to 4.3%. This strong economic data complicates the Federal Reserve's plans. The market is now pricing in zero rate cuts until September 2027. A higher for longer interest rate environment is generally a headwind for risk assets like crypto, as it strengthens the dollar and increases the opportunity cost of holding non-yielding assets. Furthermore, we are keeping a close eye on the Clarity Act in the US, which aims to provide regulatory frameworks for stablecoins. There is currently a 69% chance it gets signed into law this April. Regulatory clarity would be a massive long-term bullish signal for the entire industry. Now, let's talk strategy. How do we trade this beast? If you are a short-term trader, a scalper or day trader, your focus right now should be on the $70,500 to $71,500 range. This is a low volume gap with minimal resistance. If Bitcoin can break and hold above $70,500, we could see a very fast thin air move up to the next seller cluster near $71,961. Your trigger for a long trade is a confirmed hourly close above $70,500, with a tight stop loss just below $70,000. Conversely, if we see a rejection at the 200-day moving average of $71,200, that is your trigger to enter a short position, targeting the $67,000 support level. In this environment, you must be nimble. Do not marry your bags. Take profits quickly and use strict stop losses, because the news cycle can flip the trend in minutes. For the midterm traders, the swing traders, looking at the daily and weekly charts, patience is your best friend right now. You are waiting for a definitive breakout of this consolidation range. The bearish outlook is only truly invalidated if Bitcoin can rise and flip the $76,000 resistance level into support. Until then, we are technically still in a corrective channel. Your strategy is to buy the deep dips. If the geopolitical situation escalates and we see a panic flush down to the $64,800 level or even lower, that is your entry zone. You are looking for extreme fear to peak, and you buy when there is blood in the streets. Your trigger is a daily candle showing strong rejection of lower prices, like a long lower wick at major support zones. Set your targets at the top of the range, around $74,500. And finally, for the long-term investors, the hodlers, your strategy remains unchanged, but your conviction is being tested. You need to zoom out, look at the macro picture. The institutional adoption is not slowing down. We are seeing reports that MicroStrategy may resume its aggressive Bitcoin buying. The total open interest in futures shows that the big money is still heavily involved. Yes, Mike McGlone from Bloomberg is warning that Bitcoin must reclaim $75,000 or risk a plunge to $10,000. But remember, these extreme predictions are often designed to generate clicks. The fundamental value proposition of Bitcoin as a decentralized, scarce asset remains intact, especially in a world where geopolitical instability threatens traditional financial systems. Your strategy is dollar cost averaging. Ignore the daily noise, ignore the hourly liquidations, accumulate steadily, especially when the fear and greed index is sitting at 14. Historically, buying when the index is below 15 has produced positive returns the vast majority of the time. To wrap this up, we are navigating a minefield of geopolitical risks, macroeconomic uncertainty, and extreme market fear. But this is exactly the kind of environment where generational wealth is made. The key is to know your time frame, stick to your strategy, and never let emotions dictate your trades. Keep your eyes on the news tonight, watch those key technical levels, and stay safe out there. Until next time, this is Bonnie, signing off. Keep trading smart. Now let's delve deeper into the specific mechanics of this market. We've established that we are in a highly leveraged, news-driven consolidation phase. But what does that actually mean for the order books? When we look at the liquidation heat maps, we see massive clusters of liquidity sitting just above the current price action. The $136 million in short positions that face imminent liquidation risk if Bitcoin pushes past $71,000 is a prime example. This is the fuel for the short squeeze we discussed earlier. When these positions are forced to close, they have to buy back Bitcoin at market price, which creates a cascading effect, driving the price even higher. This is why the $70,500 to $71,500 range is so critical. It's a vacuum, a low-volume node where price can move rapidly because there is very little historical trading activity to act as resistance. But we must also consider the other side of the coin. The put volume is currently outpacing call volume by a significant margin. 54.87% puts to 45.13% calls. This indicates that traders are hedging hard against downside risk. They are buying insurance policies in case the market tanks. This heavy skew towards puts is a clear reflection of the extreme fear we are seeing in the broader market sentiment. It tells us that while there is potential for a violent move upward, the smart money is also preparing for the worst. This is why risk management is absolutely paramount right now. You cannot afford to be caught on the wrong side of a massive liquidation event without a stop loss in place. Let's talk about the macroeconomic backdrop again because it's the invisible hand guiding all of this. The Federal Reserve's stance on interest rates is the single most important factor for global liquidity. When rates are high, borrowing costs are high, and liquidity dries up. This is bad news for risk assets like Bitcoin, which thrive on cheap money. The recent jobs report, showing a massive increase in non-farm payrolls, was a stark reminder that the US economy is still running hot. This gives the Fed the ammunition it needs to keep rates higher for longer. The market has completely priced out any rate cuts for the foreseeable future, pushing the timeline back to September 2027. This is a massive shift in expectations, and it's a major reason why Bitcoin has struggled to break out of its current consolidation range. And then there's the geopolitical situation. The conflict in the Middle East is the wild card. The Strait of Hormuz is the jugular vein of the global oil supply. If it gets cut off, the economic consequences will be catastrophic. We are talking about a massive spike in inflation, a severe recession, and a global financial crisis. In this scenario, all bets are off. The traditional correlation between Bitcoin and risk assets could break down completely. We could see a massive flight to safety, with investors dumping everything from stocks to crypto in a desperate bid for cash. Or we could see Bitcoin emerge as the ultimate safe haven asset, a digital gold that is immune to the whims of central banks and the chaos of geopolitics. It's a binary outcome, and the market is currently paralyzed by indecision. This is why President Trump's national address tonight is so critical. The market is desperate for clarity. Will he escalate the conflict or will he announce a diplomatic breakthrough? The answer to this question will dictate the direction of the market for the next several weeks, if not months. If he announces a ceasefire, we could see a massive relief rally, with Bitcoin breaking out of its consolidation range and targeting new all-time highs. But if he announces military strikes, we could see a brutal sell-off with Bitcoin testing the lower bounds of its support zones. As traders, we must be prepared for both scenarios. We must have a plan in place, regardless of what happens. So let's refine our trading strategies based on this deeper analysis. For the short-term traders, the scalpers, and day traders, the key is to trade the reaction, not the news. Do not try to predict what Trump is going to say. Wait for the announcement, watch how the market reacts, and then execute your trade. If the market spikes on positive news, look for a quick long entry, targeting the next resistance level. If the market dumps on negative news, look for a quick short entry, targeting the next support level. But remember, volatility will be extreme, the spreads will widen, and the slippage will be brutal. You must use limit orders, and you must have a strict stop loss in place. Do not get greedy, take your profits, and get out. For the midterm traders, the swing traders, the strategy is slightly different. You are looking for a confirmed breakout or breakdown of the current consolidation range. If Bitcoin breaks above $71,200 and holds it as support, that is your signal to enter a long position, targeting $74,500 and beyond. If Bitcoin breaks below $67,000 and holds it as resistance, that is your signal to enter a short position, targeting $64,800 and below. But again, you must be patient. Do not jump the gun. Wait for the daily candle to close before making your move. Forced breakouts and breakdowns are common in this type of market environment. You want to see strong volume and conviction before committing your capital. And for the long-term investors, the hodlers, the strategy remains the same, dollar cost averaging. But you must also be aware of the macroeconomic risks. If the global economy enters a severe recession, Bitcoin will not be immune. It will likely suffer a significant drawdown before it eventually recovers. You must have the stomach to weather the storm. You must have the conviction to hold onto your bags when everyone else is panicking. This is not a game for the faint of heart. It requires discipline, patience, and a deep understanding of the fundamental value proposition of Bitcoin. If you believe in the long-term vision of a decentralized, scarce digital asset, then you must be willing to endure the short-term pain. In conclusion, we are navigating one of the most complex and challenging market environments in recent history. The convergence of extreme fear, geopolitical tension, and macroeconomic uncertainty has created a powder keg of volatility. But as I said at the beginning, where there is chaos, there is opportunity. The key is to stay informed, stay disciplined, and stay objective. Do not let the headlines dictate your emotions. Do not let the fearmongers shake you out of your positions. Stick to your strategy, manage your risk, and you will come out on top. Thank you for tuning in to Bonnie's Life. I'll see you in the next episode. Stay strong and keep trading smart.